And the tax deadline is just 3 days away. We'll have tips to make sure you do not get audited. The Fox 5 Morning News at 9 starts right now.
Serving all of San Diego, this is your Fox 5 News.
Plus, how about some tax tips for you? Expert advice for stay-at-home parents and small business owners. Keep it here.
This morning we want to talk about how not to get audited. Joining us again is attorney and tax guru Ronson Shamoon. Good morning to you.
Good morning. How are you?
Very good. Okay, so let's first talk a little bit about what stay-at-home moms need to know, and especially small business owners, about not getting audited.
Okay, for not getting audited, there's a lot of tips you could do to not get audited. One of them is claiming losses on your business every year. If you, let's say you have a hobby and it really doesn't have a profit motive, if you lose money in that business every year, you'll most likely get audited. Having round numbers on tax returns, people estimate their expenses, and that raises a red flag. A lot of people write off excess charitable contributions. You know, if you're making, let's say, $50,000 a year and you have a $25,000 charitable contribution, the IRS is going to most likely audit your return because people make, they're not going to donate about half of their income. A lot of unreimbursed business expenses. A lot of people who work, let's say their husbands work and they're taking care of the kids. A lot of people don't invest money out of their pocket for their business in excess of a certain percentage. So say you're, again, making, say, $50,000 and you're saying that you're spending 20 grand a year out of your pocket to help your job that they're not reimbursing you for, those would raise a red flag. So there are a lot of things that could raise it.
And I think it's interesting what you mentioned it earlier, and just now you mentioned it, and I thought this was really interesting. I didn't realize this. The round numbers is a red flag. So if you say I donated, you know, $1,000 to charity or whatever, it's that round number that sometimes can put up a flag. Exactly,
because all actual expenses are not going to be even like that. So if you look at somebody, let's say they're a small business owner, if you see 10,000, 5,000, 8,000, 7,000, all their deductions are in the rounded to the nearest thousand, that would make them question whether or not those are accurate numbers, or are they really not, you know, estimating the numbers.
Exactly. Okay, so let's talk a little bit about what is not deductible anymore this year that was last year.
We talked about it a little bit earlier this morning. They're expanding some of these deductions. They're actually trying to help stimulate the economy. The government is expanding a lot of things that were not normally deductible. They're expanding, let's say, depreciation. Before, let's say, if you were to buy a car for your business, you can normally write it off over a certain amount of time. Right now, they're shortening that period of time so that you could get the tax savings now versus spreading it out a little bit over later. Expenses for business, you could write off a bigger portion in this year than later. They're giving more tax credits, more deductions for student interest. They're expanding the child tax care credit because...
Yeah, I was going to ask you about that.
Yeah, now more than ever, it's two people having to work. So now you could expense up to, you could get a dollar-for-dollar credit, which is different than a deduction where they just match the amount that you spend. $3,000 for a single mother or father, and $6,000 for a couple that take care of your child.
Okay. What about medical expenses?
A lot of people forget to keep track of all of their medical expenses. Giving birth, all those expenses associated with giving birth, the medicines for the new baby, any sort of doctor visits, co-pays, dental, any expense that you spend for medical expenses, you could write those off. I mean, there are some limitations. If you make so much money, it has to be in excess of a certain amount of income that you make, but keep all those receipts and give those to your CPA at the end of the year.
You mentioned having round numbers on there as a red flag. What are some other ways that returns are chosen to be audited?
A lot of them are audited by somebody just reporting you to the IRS. A lot of that happens. Okay. It's usually the X factor. It's the ex-boss, the ex-wife, the ex-employee who usually reports you to the IRS. That usually raises a red flag. The IRS has a factor. They have this, we don't know the complete details of it. It's called the DIF score. And they've done these studies that show that certain people who make certain income could only withstand losses for so many years, only donate so much money to charities, only have a certain amount of repairs and maintenance in proportion to their business, cost of goods sold. So they have, you know, developed patterns for restaurants, small business owners, and there's this score factor. And if your return goes through it, if something doesn't seem normal, that would raise the red flag. But there's no 100% accurate answer. The IRS has that kind of secret as to how you know if you're going to be audited or not.
Very good. Good tips. Thank you so much. And if people want to contact you, they can. We've put your information on our website, fox5sandiego.com. You can go there and click the See None tab. Thank you. Very good. Have you done your taxes?
I did. I just did them yesterday.
Okay, very good. Raul, have you done yours?
I already got my refund.
Me too.
Yeah, man.
Good for you.
Staying ahead of the curve. Thank you, Erica. Ronson, thank you again. Good info.